Congratulations, Mr. and Mrs. Parker, on your retirement. We'll be happy to cash out your retirement account today. Just a few of the details. Great. Now let me go get your money. There's a little bit more. Okay, we have 5, 10, 15, 20. That's it.
Ow. Do not let that retirement scenario happen to you. Could you imagine going to the bank, cashing out your retirement accounts? First of all, you don't go to a bank and cash out your retirement accounts because you'll get destroyed with taxes. But if the money that you thought you had saved is now worthless, it's not a good feeling. You could just see it in their face. So here's a couple of things that I would encourage you to do. I teach a retirement planning course all over Southern California. And if you want to go to a class, you can go to yourmoneyyourwealth.com and get educated. I'm looking at different scenarios on how to help you provide yourself with the best retirement possible. We go soup to nuts on everything that you need to do on your own. I'm telling you, everyone out there needs a financial plan. Everyone doesn't necessarily need a financial planner. So if you want to learn how to do some of these strategies on your own, really get educated on all the ins and outs of how the stock market works, the tax code, and create the overall retirement income that you need for a very long time, attend the course. Just go to yourmoneyyourwealth.com, yourmoneyyourwealth.com, and right there, just on the icon, you can click and you can see the schedule where I'm going to be at over the next couple of months. Guess what? It's fall, folks. It's back to school. That means you too. So I would encourage you to go to yourmoneyyourwealth.com. Just click on the icon, and then you can get into one of our courses coming up this fall. Now, let's go to the true-false question.
All right, here we go. If my employer has a 401k with a Roth provision, I can contribute $17,500 in that plan and also contribute $5,500 to a Roth IRA.
So, I mean, here's the deal. When you look at that, that's a that's a great question, because a lot of times, if I'm contributing to my retirement account, fully funding at $17,500, sometimes people think, well, here I cannot contribute to another account. The answer is true and false, Al.
Well,
it depends.
It depends, but it's mainly true, but it's subject to income limitations. So if you're married, for example, and if you make more than $181,000, that $5,500 contribution starts getting phased out. In fact, it's $181,000 to $191,000 for a married couple. For a single taxpayer, that phase out is $114,000 to $129,000. So that means if you're single and you make more than $129,000 of income, you cannot do a Roth contribution. But if you're below those levels, you can do it and still fully fund your Roth 401k.
So you can put the money into the 401k plan and the Roth if you are under those income limitations. So you can do both plans. It's a huge deal. Now it's time to really catch up on some of your savings. Al, let's go to the next email question.
All right, here we go. This is from Terrence in Temecula. As a self-employed business owner, what are the different types of retirement plans available? And I'll start by answering that. Terrence, there are quite a few plans, starting with the SEP IRA and the Simple plans. These are where most businesses start. Not necessarily the best plans, but it's a way to go. The SEP plan is probably the most common. You can put about 25% of your salary or 20% of your profit if you're a sole proprietorship. Then there's sole 401k plans. If you don't have any employees, there's safe harbor 401ks. If you do have employees, there are profit-sharing plans, and the granddaddy of them all is a defined benefit plan, because there you can put a lot of money away. And for those of you that are in your 50s or 60s and you don't have a lot of employees but you have a lot of profit, a defined benefit plan could be a fantastic way to go. You may be able to put a couple $100,000 away each year.
Now, how long have you been a CPA?
I'd say about 30 years.
So you've been doing tax returns or looking at tax 1040s for 30 years.
Correct.
And so you've helped a lot of small business owners out. And would you say that this is probably one of the biggest things that is missed by a small business owner, is that the most popular accounts are still the SEP IRA, the self-employment pension plans. But even though the solo 401k might be a better option if they're a sole proprietor or maybe just a one individual employed business.
Yeah, that's exactly right. And the SEP is the one, it's the default, because you can set that up after the year's over. All all the way to your tax filing date, which if you're a corporation, it's March 15th, and you can extend it to September 15th. You can set it up all the way to the filing date. Now, 401k, you got to think ahead. A solo 401k, you have to set up by year end, even though you don't have to put the money in until the tax return is due. But if you'll set up that account before year end, you can put up to $17,500 into it, dollar for dollar, plus a profit sharing portion, which, by the way, is the same calculation as a SEP. So you can put a whole bunch more into 401k.
Yeah, you can put, what, close to $50,000 into the account. The problem is that you got to get the account set up before year end.
Correct.
So that's another reason that you might want to see a qualified professional before year end to take a look at your overall situation to see what is appropriate to you. Let's go to the last email question, and then we got to wrap it up.
Here we go. My accountant told me that a defined benefit plan will generate the biggest tax deduction. How do these plans work? And this is from Kathleen in Carlsbad. And the way that these plans work is they're based upon actuarial tables, based upon your age, income, years of service, how close you are to retirement. And those that are the closest to retirement, you can put large contributions, sometimes in excess of $200,000. We've seen contributions in excess of $300,000, even $350,000 into this plan. It's great if you got a small business with high profits and no employees or very few employees, because you have to include the employees as well. But let's say you don't have any employees and you have a lot of profits. What if all of a sudden you got a $300,000 tax deduction? Can you imagine saving $100,000, $150,000 in tax? It's a pretty good deal.
Yeah, I mean, so if you're making a lot of money, there's all sorts of different types of plans. If you want to put $10 away a year, if you want to put $300,000 a year away, there's all sorts of different things that you want to make sure that you consider. Here's the bottom line: get some help from a qualified professional. Work with a CPA, work with a certified financial planner. Make sure that they're working from a fiduciary standpoint, that they're not selling you products, that they're taking a look and making sure that you're doing everything appropriately. If you want to use our firm, that's great. You can always call us. We'll give you a free retirement review, a retirement plan review to see what makes sense for you. The number's right there on the screen. It's 888-994-6257. We'd love to help you out. Come on in. It's free. The phone lines are open, so pick up the phone and call. Have a wonderful weekend. That's it for us again. Next week, you know what? We have no idea what we're going to talk about. I'm told you to tease you, but I have no idea because we have no idea what the show's going to be. We don't figure it out until like 5 minutes before the show. Stick around, though. It's going to be great. I'm going to tell you that for sure. For Big Al Clopine, I'm Joe Anderson. You're watching Your Money, Your Wealth.